Okay, let's unpack this. We've got this incredible stack of sources today, and what jumps out at me, I mean, right away, is this strange tension.
It's a real contrast, isn't it?
It is. On one hand, you have the full might of the U.S. government, executing these massive, game-changing operations overseas, literally reshaping global energy markets.
And then on the other.
And then on the other hand, you have federal law enforcement agents getting the door slammed in their face by a hotel manager in Minneapolis. So our deep dive today is really focused on that collision, the friction between big business and federal power. We're looking at sources covering everything from market volatility to massive questions of government accountability.
And this one very specific, very politically charged case of a corporation allegedly just refusing service to federal agents.
Exactly. So let's jump right in with that domestic shockwave. What happens when a major hotel chain decides federal law enforcement just aren't welcome?
That is the perfect place to start, because this story, it's not just about a canceled reservation. It's really about corporate activism directly impacting how the government functions.
How so?
So the Department of Homeland Security, DHS, they went public with a major accusation. They claimed a Hilton-branded hotel in the Twin Cities area maliciously, and that was their word, maliciously, canceled room reservations for a team of ICE agents.
Right, and the context here is so important. This wasn't just some random booking.
Not at all.
These officers were deployed to Minnesota for a very specific enforcement sweep. It was called Operation Metro Surge.
An operation targeting undocumented immigrants, which is already, a political lightning rod.
And when DHS went public, they didn't just file a complaint, they brought receipts.
They did. They posted screenshots of what they said were internal emails, suggesting that the management of that specific franchise was explicitly not allowing any ICE or immigration agents to stay at its property.
I mean, think about that. That's not just a commercial decision. That feels like a corporate entity trying to actively impede a federal operation.
And the market saw it that way, too. Investors understood the risk immediately.
So what was the financial reaction?
When the news broke, shares of Hilton, that's ticker HLT, fell about 1.5% in afternoon trading.
Okay, 1.5%. Some might say that's not huge, but for a company that size.
It's a signal. It tells you investors are pricing in the very real risk of losing huge federal contracts, not because of bad management, but because of single political decision at one franchise.
And the political reaction was just as fast.
Oh, absolutely. And pointed. Congressman Clay Higgins, a Republican from Louisiana, he called the whole thing outrageous and deeply disrespectful.
He has a law enforcement background, right?
He does. And his demand was very clear. If this is confirmed, that hotel should lose their federal business accounts. Period.
Let's just pause on that for a second. The government weaponizing its own purchasing power, is that a common response?
It's the ultimate leverage. And the sources suggest that's the core issue here. These weren't just tourists. The ICE agents were allegedly booking government-rate rooms using their official emails.
So they were clearly identified as DHS employees on duty.
Exactly. And then, only after being identified, the booking was canceled. That crosses a line from a private opinion to actively denying resources to a government operation.
The denial is the whole point. Chris Crane, he's the president of the National ICE Council, he framed this as something bigger.
He called it a growing hostility toward immigration enforcement officers. He even called it an unacceptable form of workplace discrimination.
But legally, is it? I mean, employment status isn't typically a protected class like race or religion.
It isn't, no. But denying service to federal officers performing their duties while they're on a deployment, that opens up a whole different can of legal worms. It's a serious operational challenge.
So what did the hotel owner do?
The owner, a company called Everpeak Hospitality, they moved swiftly. They apologized, said they don't discriminate. But the damage, was already done. And the legal stakes for the parent company, for Hilton, remain sky high.
This is where that federal leverage really comes into play. We're talking about the GSA list, right?
The U.S. General Services Administration list. And for anyone listening who isn't familiar, this isn't just a suggestion.
No, it's the rule book.
It's the mandatory clearinghouse for pretty much all federal employee travel.
Yeah.
If you're a federal employee on business, your agency generally has to use a hotel from that list.
And Hilton has a massive presence on that list. They work with DHS, the Department of Defense, everyone.
So if the DHS legal counsel finds that federal contract clauses were violated and Hilton gets removed from that GSA list, the financial fallout across the entire corporation would be catastrophic.
And at the end of the day, the taxpayer foots the bill. A business refuses to cooperate, the government has to find another hotel, probably more expensive, less convenient, and we pay for it.
Right. And this whole issue of the taxpayer spending more money because of, well, because of obstruction.
Yeah.
It's the perfect bridge to our next topic. Because what happens when it's not a corporation causing the problem? What happens when the government agencies themselves just stop tracking the money entirely?
I was stunned when I read these numbers. We have this new report from the GAO, the Government Accountability Office.
Yeah.
And it points to just a monumental accountability gap in federal spending.
It all centers on a law from 1976, the Presidential Protection Assistance Act.
Sounds bureaucratic.
It is, but its purpose is simple. Taxpayer oversight. It requires the Secret Service, the DoD, and the Coast Guard to send detailed reports to Congress twice a year on all their presidential protection costs.
And what the GAO found was just a systemic failure to do that.
A complete breakdown. Over 3 years, from fiscal 2015 to 2017, only one of those agencies consistently followed the law.
Let me guess. The Coast Guard.
The United States Coast Guard. The two you would expect to be the most on top of it. The Secret Service and the Department of Defense. They were the worst offenders.
Okay, so how bad are we talking?
The failures are. They're genuinely astounding. Let's start with the Secret Service. They just stopped reporting after 2015. Just stopped. And here's the kicker. Officials at the agency were apparently unaware they had failed to submit the reports for 2016 and 2017.
I didn't know.
Not until the GAO called them and asked where they were. They just lost track of a legal requirement to report millions of dollars in spending.
And what about a DoD, the largest, most organized part of the entire government?
They failed to produce and submit the reports entirely for that whole period. The documents just never materialized for Congress. This is a massive, unchecked lapse in transparency.
Wow. And to show just how much money we're talking about, the GAO looked at just 4 specific trips.
4 presidential trips to Mar-a-Lago, all within a single month back in 2017.
And the cost for those 4 short trips was?
The estimated total variable cost was approximately $13.6 million.
$13.6 million. And we need to be clear what variable cost means. That's just the extras.
Exactly. It's the plane tickets, the fuel for military aircraft, the hotel rooms, meals for staff. It doesn't even include the salaries of the agents and personnel traveling.
That's enough money to fund a small city's public safety budget for a year, spent in 1 month.
And the breakdown is revealing. The DoD spent the most, about $8.5 million. And most of that, $7.5 million, was just for military aircraft operations.
Just keeping planes in the air and on standby.
Right. Meanwhile, the Secret Service, which is under DHS, they spent about $5.1 million. $2 million of that was just for lodging and meals.
The exact kind of expenses that Hilton incident in Minneapolis would force even higher.
It's the perfect illustration. These staggering variable costs are precisely why Congress requires this reporting. The fact that the Secret Service and the DoD failed to provide this basic transparency is a severe problem for government oversight.
Okay, so we've seen the cost of inefficiency and resistance at home. But that seems almost minor compared to the sudden multi-million-dollar moves the U.S. can make abroad.
Right.
We need to shift gears and talk about this oil shockwave we're seeing.
Yeah, the geopolitical landscape has just been completely upended. The sources detail a massive U.S. military intervention in Venezuela, where President Nicolas Maduro was captured and removed.
And that action immediately sent ripples through the markets.
An oil shockwave is what they're calling it, because it signals a huge shift in global energy politics.
And we have to remember, Venezuela isn't just another oil producer. It has the world's largest proven oil reserves.
So a regime reset like this is seen by the market as a major infrastructure play.
An opportune.
A massive one. The sources say the Trump administration is already talking to major U.S. oil companies about rebuilding the entire sector. It's a chance for American business to secure a huge new source of crude oil.
And who are the big winners identified so far?
Well, Chevron is the name everyone is pointing to. They're seen as having the most to gain because of their existing footprint there.
Okay.
We also saw Valero Energy shares jump almost 3% right after the news. And interestingly, that validated a long-term bet made by Michael Burry.
The guy from The Big Short.
That's him. He apparently saw this coming years ago, the eventual need for U.S. intervention to get Venezuelan oil back online. It just shows how fast smart money moves on this stuff.
But let's pump the brakes a little. The reality check. The market hype is one thing, but the logistics on the ground are another.
That's the critical nuance, yes.
Even with this huge geopolitical shift, crude oil futures are still trading near 5-year lows. There's a fear of a supply glut, not a shortage.
Right. And any recovery in Venezuela's production will be, as the experts warn, slow and costly. The infrastructure there is it's degraded, it's in ruins.
So what kind of investment are we talking about?
It could cost well over $100 billion to get that oil flowing again. So the payoff for these U.S. oil majors is a long, long way down a very risky road.
Still, the military action itself had another effect, totally separate from oil prices.
It did. The sources are calling this a new paradigm in U.S. military operations. This kind of swift, decisive action. It means heightened demand for aerospace and defense stocks. Geopolitical uncertainty is good for business in that sector. These stocks are expected to have a very strong 2026.
So let's tie these threads together. We've got a major hotel franchise allegedly putting politics over serving federal agents on U.S. soil. We've exposed massive accountability failures in how our on-security agencies track their spending.
Right.
And we've analyzed the giant economic shockwaves from a U.S. military intervention abroad.
The narrative that connects all of this is really about the functioning and the integrity of government. The GAO report, combined with the Hilton incident, it raises a huge question. If core agencies like the DoD and Secret Service are failing to even track the millions they spend, and at the same time private businesses start openly refusing to serve law enforcement, what does that dual pressure do to the government's ability to even operate?
It's an attack from within and without.
Exactly. The system relies on both internal compliance and external cooperation. When both start to fail, you have a real problem.
And that brings us to our final thought for you to think about. Consider the ultimate cost here. When a business refuses service to federal agents, it's usually framed as a political statement against a policy, right? Like immigration enforcement. But who really pays the price for that statement? Is it the hotel that might lose a government contract? Or is it the taxpayer who ends up funding a more expensive, less efficient operation because those agents have to find lodging somewhere else? It seems the cost of corporate political posturing often lands right on the shoulders of the American public.